This holiday season, we're helping you catch up on all your favorite FreightWaves TV shows. You can now watch the latest freight news, market insights, and in-depth discussions on your preferred streaming platform. As our gift to you, if you purchase a FreightWaves Live Atlanta ticket from now through December 18th, you'll receive a free Apple TV 4K. Download the FreightWaves TV app today and you'll see freight has never looked this good.
It's Friday. I'm Anthony Smith, your host, and this is FreightWaves Now. We have a full lineup for you today. We have Luke Falasca back in the house talking to the brokers. We have Seth Holm talking to the shippers. But first, a word from Strickland on a carrier update sponsored by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update sponsored by PowerFleet. So we've had a pretty interesting week this week. Capacity itself was tightening for a while. We saw tender rejection rates really start to peak out up here above 8%. That has since, just over the last day, come back down. And it was really coming down not necessarily over the whole country. It's coming down over just a little part of the country. So for those of you tuning in today, you're getting a sneak peek into something that we're releasing this weekend in Sonar. This is the weighted rejection index. So anybody that's been paying attention to the maps that I pull up over the past week or so, I combine tender market share with the weekly change in tender rejection rate. So this map essentially is giving you a quick, easy glance at what are the most important markets throughout the country right now to look at in terms of capacity and destabilization. So anything in red, you're starting to see a lot of stabilization. Tender rejection rates are coming down, but also you're combining that with market size. So any of the smaller markets aren't going to have as much weighting. So Bismarck, North Dakota up here is not necessarily getting a lot of action because it's 0.012% of the overall freight market. Atlanta, however, dark blue, it's a bigger portion of the overall freight market. So any movement in the tender rejection rate there is going to get weighted a lot higher. So anything in dark blue, you pay attention to those areas. That's where you're going to see the most relevant markets to pay attention to, especially from a capacity standpoint. So let's break this down onto the heat list here. So lots of green here. So I've sorted this from top to bottom, the most relevant markets for you to pay attention to today in terms of capacity destabilization. So Ontario, California, one of the biggest markets in the country right now, Los Angeles, Joliet, Atlanta, these are all huge markets. We do not always see this type of pattern across the bigger markets. Atlanta, for instance, has been very quiet throughout the third and fourth quarter this year, but we're starting to see that show up in the top five or so disrupted markets across the country. This is big news, especially for carriers that are operating in these areas. If you're looking to source any freight on the spot market right now, now's a great time to do it. You have a lot of opportunity in some of the bigger markets. Now, don't expect these huge expansions to your margin, but there's going to be a lot more opportunity, especially if you found yourself stranded in one of these bigger areas. And you're going to be able to cover some of that deadhead percentage going into the Atlanta, Joliet, Los Angeles market. Again, a lot of these markets may not necessarily be undersupplied to a super big extent, but we are seeing a directional shift to where they are potentially undersupplied, therefore increasing rate pressure in this market. You can move there with a little bit more confidence than you were last week. So let's break down what's going on in the biggest one right here, Ontario, California. So I've got the OTMS, the outbound tender market share, in the green line here, showing you just how much of a percentage this market is taking up in the overall outbound volume in the rest of the country. 3.474% of overall volume of the United States represented in the Ontario market. That's huge. That's its second biggest market in the country. And then you see this big old peaky mountain right here. 7.62% tender rejection rate. Overall. That's a big jump from under 5%. And if I pull this back out, you see all the way back down here earlier in the year, just as recently as October, you had under 3% rejection rate. So capacity on the West Coast has really tightened up over the past several weeks. Actually, today is one of the highest rejection rates we've seen all year long. prior to January 31st. So Ontario, California, Los Angeles, California, any of these bigger markets today, if you're looking to the spot market, you can source that there. Maybe there's an opportunity for you to expand your margin, especially after a very soft year. We're going to close out the year probably on a pretty tight market. Looks like a little bit tighter than we saw this summer. So make sure that you definitely are utilizing that opportunity to make sure that you close out 2019 with a bang. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi everyone, I'm Luke Falasca. I'll be bringing you your broker update for today, and happy Friday. It's here. We've made it to the weekend, so let's get ready to go. We're going to be taking a look today at a lot of capacity changes, especially around the Midwest, and how that's changing rates a lot, as well as tightening up certain markets. So we'll be looking at the map behind us here in just a second to see which areas are going to be a little bit harder for brokers to focus on versus a little bit easier. So let's take a look. So what you have here behind us, this is our head haul index, okay? So the easiest way to take a look at this is the darker the red means that the tighter or the looser capacity is, which means as a broker you have more available capacity or trucks to pull from to move your freight. As you have some of the darker blue markets like down here in Southern Cal, kind of around here in the Midwest region, you'll see capacity is going to tighten up a lot, okay? So that can put a little bit of upward pressure on pricing as there's less and less carriers to move. So basically, the darker the red means there is more volume going into a market than what's coming out. The darker the blue means there's more volume going out of the market than what's going in, and that's relative to the market. So we're going to be honing in kind of in this central area or Midwest region of the United States. We got Chicago, a lot of other areas, Bloomington, Rock Island. We're going to be focusing mostly on Rock Island today. That's where that mark is, so be taking a look at that and how that's affecting some of the rates going in and out of that market. But before we get there, just, there's a lot of red out here on the western side of the United States. So if you are moving freight out here or up there in the Seattle region or in Texas, there's a lot of extra capacity to move that freight. So whatever loads you're getting from your shippers, be sure to accept as many of those tendered loads as possible, because you're going to have a lot of capacity to move the freight and you'll be able to cover more loads much easier. All right, let's take a look here at Rock Island. So what we've got is the tender rejections here. We saw this big peak here around Thanksgiving, no surprise there, and then we dropped off as we got into the first week of December, and we hit our low point here around 21% there on the 10th. All right, that's still significantly higher than the national average, which is floating just under 8% today. And then we're starting to rise back up. We're hitting that 25% mark, not quite up there around that 30% that we saw around Thanksgiving, but we might continue to see that rise up as this capacity is beginning to tighten up more and more. And there's more options for carriers to choose from. So you might have to continue to pay a little bit more of a premium to get your freight moved. So what this means is, tender rejections, as those go down, you're going to be able to suppress carrier rates a little bit more and increase your margins. All right, but as we continue to rise back up and we start to push that number higher and higher, you're going to have to pay a little bit more for carriers to get your freight moved. Okay, so that's a perfect opportunity for any spot market price loads that you have for your shippers to increase those bids far above where you were moving them before. So whatever you were moving your freight from out of Rock Island down about on the 10th, be sure to increase that pricing a little bit. Don't move it for the same rate. Tender rejections, the market's tightened up, so you're going to have to charge a little bit more to your shippers to get those margins. Taking a look at a few of the lanes here, Rock Island to Des Moines, Rock Island to Cleveland to Bloomington, all those areas right there in kind of the central Midwest part of the United States are very high. We're going to take a look at the lane from Rock Island to Cleveland. We're sitting at about 20% there, tender rejections. We've seen almost a 10% increase day over day. So let's take a look there and see what's going on rates and the forecast. So this is our rate forecasting tool that we came out with about a month ago. We're going to take a look at the median price. This is the Rock Island to Cleveland. So that's $2.20 a mile. Keep in mind that's just a line haul, so you do have to add your fuel surcharge to that number to get your rate all in. But Today we're looking at about $220 a mile. Now what's most important here is about a week out, we're projecting there's going to be a pretty significant rise up to about $240 a mile. So that's going to apply a lot of upward pressure. So as we go from our last slide, those tender rejections were increasing. It looks like there's going to be that continued upward pressure. So that's a perfect opportunity to get any lows that you have on this lane covered today or as soon as possible, because there's going to be a continued upward pressure on those rates. So you don't want to have to pay that premium if you don't have to. So keep an eye there, and then it looks like as we get out of December and into next month, it looks like there's going to be a lot of downward pressure on pricing, so it is going to soften up a little bit. So anyway, that is your broker update for today. I'm Luke Falasca. Make sure you have a fantastic weekend, and let's go ahead and finish this year strong.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
And welcome to our shipper update. I'm here with Seth Holm. Seth, what are we talking about today?
Well, so Anthony, the Fed met on Wednesday.
Yes.
And so I've parsed the minutes here. I've got 4 main takeaways.
Okay.
Number 1, they kept interest rates steady. Number 2, the economy is getting better.
Right.
Number 3, inflation is tame. And number 4, no interest rate increases until 2021. So
Okay.
I can dive a little bit deeper into each one of those.
Let's.
So they kept interest rates steady. If we look here at the chart, this is the Fed funds rate.
Okay.
Going into the meeting, they had previously lowered interest rates 3 times. Now they've kept the target range steady at 1.5 to 1.75%. And they're doing that because the economy is getting better.
Okay.
And when they referenced the economy getting better, they pointed to, and you know this, the strong jobs report in November.
Right.
That was really a blockbuster report. And when they tend to decrease interest rates, it tends to affect the economy at a lag. In terms of inflation being tame, that's really simple. Inflation has just been running below their 2% target, and as a result, that brings us to our last point. The Federal Reserve Board all meets together and they project future interest rates with their dot plots. And the majority of the board thinks that we're not going to have interest rate increases going into 2021 because inflation is low, and that should set us up both for the freight economy, the markets, and the economy overall to gather some steam as we head into 2020.
Perfect. So it's great to hear that. Sounds like the economy's in a good place. We're optimistic about year end and going into the first quarter of 2020.
Correct. Yeah.
Awesome.
Absolutely.
Well, Seth, thank you so much for this shipper update. And thank you for tuning in to this episode of FreightWaves Now. The content doesn't stop here. We're also available on all your favorite social media platforms. We just launched our FreightWaves TV app, so we're available on all your favorite streaming platforms as well, including Apple TV. And we haven't forgotten about all my fellow Android users out there. So be sure to stay tuned, and we'll see you next week.
FreightWaves continues to follow the incredibly sad story of Indianapolis-based carrier Celadon Group abruptly shutting its doors, leaving 4,000 people without jobs weeks before Christmas. We here at FreightWaves want to help. FreightWaves has established a free job board for companies to post their openings and for people looking for employment in the freight industry to share their resumes. There's no cost for anyone to participate. Hundreds of jobs have already been added to the site since it went live on Monday. If you're looking for employment or have a job to post, head to freightwaves.careers.